Are you ready, Steve? Andy? Yeah! Bert? Well, all right, fellas. Let's go!
You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borth. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today is Thursday, 20th day of January already, 2022. Thanks so much for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. If you've joined us via our YouTube channel, youtube.com/CFRN, glad to have you with us, but just know I'm unable to monitor the chat box there because I've got my eye on the question box on our go-to platform. So, there is another way that you can join the show so that you can ask questions and participate in the discussion. And you only have to go through this process one time. Visit our homepage at cfrn.net. On the right-hand side of the page, click the big microphone, follow the instructions. You'll be registered in about 30 seconds, and that will give you one-click access to the show each and every day. You get an email right before the show starts with a link so that you can just click it and you're in like Flynn. You're able to ask questions, participate in the discussion. Of course, there will be days you're out of the office and away from your desktop, so the only way you can join is by visiting the YouTube channel, youtube.com/CFRN. Not only do we broadcast live each and every day on our YouTube channel, but we also archive each and every daily show. Currently, there are over 1,800 daily live broadcasts archived for your educational and viewing pleasure. So, open with a word of prayer. I want to share something written by Victoria Riolano, and it has to do with believing that God will do what he promised he would do. Hebrews 11:1, you're all familiar with. Now faith is the substance of things hoped for, the evidence of things not seen. And this is what Victoria wrote. She said, I couldn't stop obsessing about it. After months of planning for our church fall festival, we had run into a major issue. A week before the event, the forecast called for severe thunderstorms. As the official point person for the festival, I was immediately concerned. Between the vendors secured, the entertainment we had purchased for the kids, the church merchandise that had been ordered, and the money spent on advertising, canceling the festival was going to hurt more than just my feelings. Panic ensued. There was simply not enough time and resources to reschedule the event and not incur a major loss in the process. It was in those 7 days leading up to the event that I realized my inner tendencies to worry and worry and worry some more. I spent hours on the weather apps comparing the times The rain would start or stop. I couldn't sleep and wondered what, if anything, I could do to fix this situation. Sadly, the one thing I didn't do was run to prayer. In my mind, I figured God had more important things to handle than a fall festival. I troubleshot every scenario and justified why God would allow this to happen. Maybe a cancellation was His will. Maybe He didn't realize we were putting on the event to let people know about His church. During it all, the Spirit convicted me with this idea. You are a believer, but you're not a believer. Stunned at this still small voice, I wondered how this could be possible. I had been a believer of the gospel for almost 2 decades. I led worship and helped start churches. How could the Lord not see me as one of His faithful ones? You see, the Lord wasn't challenging my belief in Him. I fully believed God was real. Instead, He was challenging me to actually believe in His power for the here and now. I was great at believing God was the reason for my heavenly blessings in everyday life, but I struggled with needing to be in control when things turned south and not trusting God to show up in those moments too. I was guilty of being a believer who wasn't a believer. I am afraid I'm not the first. I'm convinced that many Christian followers struggle to believe in His power. We see this in the story of Thomas in John 20. After the resurrection, as Jesus started to appear to His disciples, some questioned how it could be possible. Yet we see a moment where Jesus challenged Thomas's doubt. Jesus asks Thomas to touch Him to prove that He was indeed flesh and bones, resurrected from the grace and not just a spirit or his imagination. Then Jesus said to Thomas in John 20:27, "Put your finger here and look at my hands. Reach out your hand and put it into my side. Stop doubting and believe." Thomas replied, "My Lord and my God." Jesus said to him, "Because you have seen me, you have believed. Blessed are those who have not seen and yet have believed." The words of Jesus are so powerful and a reminder that our primary responsibility as a Christian is to have faith. Like Thomas, many of us have the faith that requires us to see it before we believe it, which really isn't faith at all. I've come to learn that it's easy to have faith in situations we can control or that are easy, but when we must trust God for something bigger than us, this is when it matters. When we face an illness that we're told is incurable, or when our finances seem daunting, we walk in faith, knowing that God's will shall prevail for our lives. When we deal with difficult relationships, we believe for restoration. Even we don't understand, we trust that the Lord is with us. We remember that we are blessed when we walk in the assurance that the Lord always has a plan. And our faith doesn't have to be large. It can be as small as a mustard seed. This is why my church's fall festival taught me to become a believer who actually believes. And the Lord, being as good as he is, he completely cleared the forecast 24 hours before the event. Not a single drop of rain fell until we drove from the lot at the end of the event. We had an amazing turnout, and so many were blessed. This was just another example of the Lord reminding us that He cares about every detail. What an amazing God we serve. Thank you, Victoria, for sharing that with us. Heavenly Father, we thank you for your blessings, for your mercy, for your grace. I thank you for taking notice of every detail of my life. Not one concern is unseen by you. Forgive me for the time I become obsessive and choose not to trust you. Teach me, God, to release control. I trust you for my health. I trust you with my family. I trust you for my finances and every other area of my life. God, show me when I am not being a true believer of your word. I thank you for searching my heart and showing me when I allow worry to consume my mind. I praise you for being a good Father who delights in his creation and who still answers prayers. Help me to not just believe in who you are, but also your ability to shift my circumstance in an instant. You are my place of comfort and stability all the days of my life. In Jesus' name we pray. Amen.
Amen.
Amen. Happy Thursday, guys. Hope it's a happy Thursday for you, whoever you are and wherever you are. And Michael, I hope you're feeling better.
I am feeling a lot better, actually.
That's good. Guys, let me give you the numbers from around the world. We'll start here in the U.S. with the cash markets, or the indices as they're called. The Dow is up 362 points. That's a little over 1%. The NASDAQ is up 244 points, which is 1.75%. The S&P 500 up 55, make that 56 points, which is a gain of 1.25%. And the Russell 2000 up 35 points, which is a gain of 1.75%. In the Asian markets at the close, the Nikkei posted a gain of 305 points, a little over 1%. The Shanghai fell 3 points, and the Hang Seng gained 824 points. That's almost 3.5%. And in the European markets at the close, FTSE was down 4.5 points. The DAX was up 102 points, and the CAC was up 21. That gives us a mixed day in Asia. It was a mixed day in the UK, but so far it's a big green Radio Thursday here in the US of A. So with that, we'll go to Michael and get a recap of what happened this morning in the live training room. After that, I'll be back. We'll take a look at the Logic 247 alerts, the concierge trade alerts, and at any point during the broadcast, if you have a question, just type it in the question box and we'll be happy to answer it for you. So Michael, I can see your screens.
Okay.
If you're ready,
All right.
it's all yours. Just take it away.
I am ready. All right. Here we go. Good afternoon, everyone. Today is Thursday, the 20th day of January 2022. Now, if you've not taken a free trial with us and you want to, go here to eminitrainingschool.com. On this page, all that we ask for is your first name, your email, and your phone number. You can tell us your biggest trading channel so we can tailor one-on-one training just for you. Hit the send button, you'll be sent a confirmation link. You must click on that confirmation link, okay? If you don't click the link, we don't know that you took a free trial, so you got to make sure you click on that link. All right, the spreadsheet. Now, I did fix some of the spreadsheet today, so I got it most of the way working, but not all the way. If you're going to look at the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. Today, as I said, is the 20th day of January 2022. Made 2 ticks in crude, 11 ticks in gold, and 54 ticks on the ES. That put us at plus 805 on the morning session. Today, it took 2 minutes and 1 trade to get to the goal for the day. At that point, I was up $100 a contract and took a total of 26 trades. So on the month, now up $9,545 a contract. That's over 13 trading days, averaging $734 per contract for a 2-hour trading day. Now I've gone 116 days getting my goal since the last down day, and I've got my goal every day so far this year, 13 out of 13 days. So I did fix all this down to here. So all this on the year now, 9,545. It's all the same stuff as the monthly. Okay, 13, 734, 23. All right. Let's get into what actually happened. Now, most of our trades were on the ES today, so I'll start out with gold. That's where we had the fewest number of trades. We did have a couple of nice ones right at the end, but we had this one right here. Was a break even. Then we had a +2 right there. And then we had this one here that was really easy for everybody to get into because it pulled back about 4 or 5 ticks to get you into the trade. That gave it a nice easy 10 ticks. It went right down to where I thought it was going to go, and then it just kept going. I had drawn this one in hoping for a pullback in here, but we didn't get the pullback until we got down there. Then on this one, we got the pullback, and it was going so fast, it was hitting all these numbers I was drawing in as I was drawing them just about. And it went right through all those numbers, gave another short right here that I missed. So I missed that one. I got 10 there. And on this one, I got 1. And that was it for gold. This was the end of the session here. I had said, okay, well, it's looking good. It could go either way. The charts were suggesting it was going to go up. Dom was saying it could go up. If it does, it's going to go up here. And if it goes down, it should go down to here. It did both of those things. It went down to there, and then it went up to here without giving the trade set up in either direction. Then we get into the break, and it really didn't give us anything during the break either. Okay, so it did pretty much what it said it was going to do. It just didn't give you a trade set up to get into the thing. Now, crude oil. I had a couple of trades on crude today that I left my orders on and didn't count those toward the total. We did have crude inventories come out today. I'll go see how they actually came out. Hold on. That's not the right one. This one. Here it is. So they were expecting a draw of 2.1 million. Now the natural gas came out as well, but they're expecting a draw of 2.1 million on the crude, and they got a build of 500,000. And on the natural gas, they're expecting a draw of 190 billion, and they got a draw of 206 billion. Now, they call that draw good news. It didn't used to be that way. Like 2 years ago, it wasn't like that. That would be bad news. This would be bad news. Actually, this would be good news, and this would be bad news. But existing home sales came out today lower than anticipated, and that was the news for the day. But here we go. On the crude oil, we started out with a break even right there. Then we had another break even. Then we had a +5 right there. And you see it was trying to get up to these numbers that I kept drawing in. It did get up to these. It didn't get up to that one. We got in here. We stopped out pretty much to the tick, and then it went up a little bit. Came back down and pretty much just wanted to keep us out of the market. At this point, we're at -3. And I missed that trade there, which would have probably gotten us to break even. But then I picked up 10 ticks right here to get us to +7. Then 3 ticks to get us to +10, then a break even. Then this was a trade that I took by accident, and I got 20 ticks profit on that. I didn't count that. Then I stopped out here and I went back down to +2. I did take this trade. I didn't count this one. I got to count that one in. I believe that was A643. I took 12 ticks on that because I was looking for 15, and I ended up getting 12. So I'm going to add that on because that's a significant amount. And so that was it. I ended up with 14 ticks on crude oil, I think. And let me just go do this and this and this and this and this. Okay. And then during the break, these were the numbers I was looking for. This one, which we finally got to, this one was next, then that one, and we got to all of those numbers, and then it tanked. This move down, we didn't get a trade set up. This move up, there was one right here, and that was really it. In this sideways action right here, it looks like there was really nothing. Now the slingshot's all messed up. There was one right here, and that was it. There wasn't a lot to go on there. Yeah, but I actually ended up with a little bit more than 14 ticks on crude, but for the record, today we ended up with 14 ticks. And I'll fix that in the spreadsheet. I got to add one more trade on there too. But then we get into the ES, and that's where we had the majority of our trades today. Okay, we started out over here. Our very first trade of the day. It's right here. As soon as I sat down, we picked up 8 ticks, got the goal for the day. There was another trade right in here that I missed, and it looks like another one right there that I missed. Another one here I got to break even on. There was a short right here that I missed. A short right here that I missed. What was I doing? There's another short right there I missed. Another one right there I got to break even on. Okay, so at this point, after those couple of break evens, I think I was at still at +8. Okay, then I picked up 4 to get me to +12. Then 12 to get me to +24. Then a break even. And 6 to get me to 30. And you see I was going right to the numbers. That was great. Missed a trade in here. Looks like, no, I didn't really miss anything up there. There was a trade. The trend line would have gone like that. Yeah, there was not really anything in there. There was a bounce off the BBC, highest probability trade right here. Break even there. Now after, what was that last game? We were at 30, I think, after gaining 12. No, wait. Went from 12 to 24, and then from 24 right here to 30. So we had +6 there, and then we had somewhere we had a +4. I think right here we had a +4 to get us to 34. Then we had something to get us to +36 somewhere in here. I'm missing a +2 to get us to 36, and then we had a +8 to get us to 44. And then we had a break even, and we have a stop out coming up to get us back down to 36. Then we had a +8 to get us back to 44. Then we had a +4 to get us to, I'm sorry, +2 to get us to 48. No, a 4 to get us to 48. And then a +6 to get us to 54. And then we had a break even. And that was where we ended the morning session trading, I think. Yeah. Okay, so I was looking for it during the break. I was looking for it to get up to this number right here, which it did do exactly, and it sold off of that number. During the sell-off, didn't give anything right there, but it did give a short right in here. Turned around, started moving up, got into the zone, no trades. Came back over here, another short right here, another short right there, and that was about it. So there was a lot of chances to take trades today on the ES. It was moving around quite a bit. There's one right now on gold, and on gold right now it should go up to 44.4. That's where it should go to. But anyway, we ended up with +54 on the ES. Now go back here and bring the spreadsheet back up. Hold on. Which one had the spreadsheet in? This one. Okay, so on the crude, we actually ended up with a little bit more. We had that one more +12 at the end, so put us at +14, and that gives us one more trade over here at the end. 27. Okay. So these numbers are off. I don't know what those numbers are. These numbers are right. These numbers are wrong. Anyway, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures down at the bottom. I didn't look at the question box. Nothing there. Okay, there's nothing in there. All right, so today is the 20th day of January 2022. We made 14 ticks in crude, 11 ticks in gold, and 54 ticks on the ES. Put us at 9:25 in the morning session. Today it took 2 minutes and one trade to get to $100 a contract, and we took a total of 27 trades this morning. So on a month now, we're at $9,665 a contract. That's over 13 trading days, averaging $743 per contract per 2-hour trading day. We've now gone 116 days since our last down day, and we've gotten our goal on 13 out of 13 days so far this year. So on the year, we're at 96.65, 13 days, averaging 743 per contract per 2-hour trading day. All right, I'll get the rest of this stuff fixed up hopefully by tomorrow. All right, so it'll all make sense. If you've not taken a free trial with us and you want to, go here to eminitrainingschool.com, and on this page, all we ask for is your first name, your email, and your phone number. You can tell us the biggest trading channel so we can tailor one-on-one training just for you. Hit the send button. You're going to be sent a confirmation link. You must click on that confirmation link. Okay, if you don't click the link, we don't know that you took the free trial, so click on that link. All right, that's it, guys. With that, we will pass it back out to Studio A, fabulous Phoenix, Arizona, overlooking South Mountain, America's largest city park. Dwayne, if you are ready. Okay. Dwayne is not ready. All right, well, then we can still look at other things that are relevant. Okay.
If there's something you want to look at, go ahead.
No, I was just going to bring out something else. I was going to find something else to look at.
Go ahead if you want to. I mean, it's up to you.
No, you can have it. I got like 5 other things that I got to do right now. But,
Okay.
yeah. So you can grab it if you want. Oops. That didn't go where we're supposed to. There we go. Okay. Yeah, so I'm not working with a spilled cup today.
That's good.
But, yeah, everything.
Did you have to get on the keyboard?
No, it dried out. It was okay. It came out pretty quick. I just turned it upside down. It dripped. And everything that was on my desk is really level, so everything puddled. It didn't drool all over it. And I had 2 mice that were active on my desk, so I was good with those. And it was all right. Here's just my log that's all soaked and kind of a mess, but it's better. I can work with it.
Okay. Recap of the recap.
Today it took 2 minutes and 1 trade to get to $100 contract.
Good job.
Thank you.
Okay, guys. That's what happened the first 2 hours of Wall Street today. And this is what's happened. Since the markets opened this week, we had a Monday holiday. So I put out no alerts on Sunday night. I started putting alerts out Monday night at 6 p.m. Eastern. We're in week 181 of Logic 247, and that's our 24/7 around the clock Emini alert service. So far this week, we've issued, as of 12:20 today, we've issued a total of 47 alerts. 5 never triggered. We're still waiting on the outcome of 2. We've had 40 actionable alerts, of which 4 or 10% would have been stopped out based on not risking more than $300 per contract per trade, but less when possible, based on market structure and a very simple 3-step process that we teach all of our traders. Now, along with the Logic 247 alerts, which come out around the clock and are based on current price action, we still have our original alert service, the concierge trade alerts, which come out as a static report each evening shortly after the Globex open. And these alerts are based on historic price action. So last night the alerts came out. The CTA is at 6:45 p.m. The best way to handle this report once it's published is whatever markets you trade. We'll use the ES as an example. When the report is published, make note of the current price of the markets you trade. And in this case, if once this report's published, if price starts trending up towards 45.58, that's bullish. So our strategy will look for opportunities to be long the market. That's where you'll use Logic 247 and everything you learn in the live training room to yourself find opportunities to be long the market. If on the other hand, price starts trending down towards 45.14, that's bearish. And so our strategy will look for opportunities to be short the market. And that's where you'll use Logic 247 and everything you learn in the live training room to yourself find opportunities to be short the market. And so if you want to grab a screenshot of these numbers, do that now, and we will go through each and every one of them. Okay? All right. So we'll head off to a daily chart of the S&P 500. We discussed yesterday the potential for a trader VIG, and that's what we got. We broke this trend line, and then price came back up to kiss the underside of the trend line. It's called a trader VIG simply because a guy named Vic wrote a book, and he was one of the first people to write about this phenomena, which happens quite often when you have major trend lines broken, such as what we've got here on the daily chart. Now we had an old trend line. As you can see, on this chart, the last time we touched it was on these lows put in back on October 5th of 2021. And so we broke the trend line. We came back and kissed the underside. We've now spiked this old trend line, and today we're building a green candle back up to that trend line, the step line, red and falling, and the 62% fib retracement of the last leg up. And the last leg up, the low was put in December 3rd. The high was put in January the 4th. So it'll be very important to see what happens as price reaches this area. We have to assume this area because we've got four things. We've got the bottom side of the trend line, the step line, red and falling, and the 62% fib. So that would be potential resistance times 4. If price can overcome all those obstacles, then above is the 50% fib retracement, and above that is the daily BBC. And right here is where we had our bearish cross, and that took place, it's like on January 14th. Okay. Today being January 20th, so we've had 6 trading sessions since then. If price finds resistance at this area, on the way back down, there's again potential support here at this trend line. And then this low, which we talked about, this low, which was put in on December 20th at 45.20 and a quarter, if you follow the horizontal line on my cursor, you'll see that's exactly where the market found support and is now giving us a green daily candle. If this low put in on January 19th at 45.17 and a quarter, if that is broken, then we look left to the low put in on December 3rd at 44.85.75 as potential support. Should that support fail, okay, now price is headed up, but if we find resistance and head down, then the low of today and yesterday will be potentially important support. followed by this support right here, put in on this day, December 3rd. And if all of that potential support's taken out, and down here where the bullish cross took place back on October 19th, we would look for that to be good support, at least good enough for a nice bounce, possibly as high as the low of this candle here. But for now, we're printing a green candle, so your concern should be with potential resistance overhead. Okay? It's a very bullish day. I would be surprised to see the market reverse and erase the gains today. But once we reach this area right here, then it becomes quite possible, if not probable, that we then get another candle to the downside or the beginning of another leg to the downside. And depending upon how things pan out here, we will start talking about the last leg down as opposed to the last leg up. But in order for that discussion to change, we need to take out the low of this day right here on December 3rd. And again, that low is 44.8575. At that point, we can safely say that the market has gone from over a year of a bullish trend, almost 2 years, to in fact a bearish market. So let's go to the 30-minute chart of the S&P. The long CTA last night was 45.58. We only triggered once. We had a bullish move on the 30-minute chart. If you look on a smaller time frame chart, you'll potentially see multiple triggers at that price. But on the 30, a lot happens inside of a 30-minute candle. Price then rallied up, and we had a bearish cross here that led to an extended move down. And so we expect that area, the first time it's revisited, the bearish cross, the first time price revisits the area of the bearish cross, we expect it to be resistance. And it was. It sent price from a high of up around 45.76 back down to a low of 45.62, and then buyers came in, took us back up, and on this candle right here, the 10:30 a.m. Eastern candle, we were able to break through that resistance area, and we overshot the weekly trading zone by just a bit. The zone is 45.82/83. When price rises to a weekly trading zone, we expect that to be good resistance until proven otherwise. And because every one of these candles is still touching the weekly zone, we can't say with certainty that price has overcome this weekly trading zone. Even this candle that spiked up real nice on at 11 a.m. Eastern, looking left at the previous swing high, you would expect that to be resistance, and it was. It sent price back down to the weekly trading zone. When the market finds support, it's going to go look for resistance, and so this time we overshot that area by a little bit, but it sent us back to the weekly trading zone, and we've now been consolidating at the weekly zone for a couple of hours. We've got blue and climbing. Price is right at the zone. So one of two things happens. Buyers show that they're more committed to their positions than the sellers, and we catch a rally up to at least this swing high, or an attempt to reach a swing high. And then it's possible the price could trade through that high. And the next area we'd look for resistance is right here at about, or I call it 4,600. Okay. If buyers were to throw in the towel, and I don't see any reason for them to do so just yet, then we would have a potential retracement back to the BBC. The pullback holds more often than it doesn't, so we would expect price to hold at the BBC, and it might spike it just enough to get below that long CTA, because once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. And so it's possible that price could retrace back to the BBC, spike below the long CTA, and then give us another long trade back up to the weekly trading zone at 45.82. And so 82 was the published target, and the published entry was 58. So that's 24 points at $50 a point. It's $1,200 per contract traded from the published entry to the published target. On every long alert, logic or CTA, the final trade to target is always the weekly trading zone above, and on a short, it's always the weekly trading zone below. Except for those rare occasions when we are above the highest weekly trading zone, as we are on silver, as an example, and I'll show you that in just a moment. Then you flip back to the previous week zones and see what area might provide resistance there. So we're printing a green candle. Buyers appear to be mustering their forces to take us higher. Just keep in mind that this same area right here could become potential resistance, followed by this area, and then followed by this area. The next weekly trading zone overhead is up at 46.26. There was no short trigger on the short side on the CTA. CTA was at 45.14. Price came right down to the important price, important area, was rejected and sent in the other direction. So there was some back and forth consolidation here overnight into the morning. And here's the 9:30 a.m. opening candle on Wall Street, which tends to be typically the largest candle of the day, of the entire session, the entire Globex session. All right, on the Dow. The long CTA was 35,153. So 235. $235 minus 153. That's 82 points from the published entry to the published target at $5 a point. That's $410 per contract traded. At the zone, we overshot it a little bit. Price retraced back to the CTA. However, it didn't dip below it to give us another official trigger. But those who understand our methodology and our strategy would know how to handle this and trade back up to the weekly trading zone. Now, Why did price stop here on its way to the zone overhead? Price is always trying to get to a weekly trading zone. From the moment the market's open, Sunday night, 6 p.m. to Friday afternoon at 5 p.m., price is always trying to get to a weekly trading zone. If we're above the BBC, it's trying to get to the zone overhead. If we're below the BBC, it's trying to get to the zone below. As we look left, we can see where the market last found resistance. When price got up to this area, it was rejected. And so this morning, after this huge candle, this is the 9:30 a.m. opening candle. We consolidated at the zone, and then on the 10:30 a.m. Eastern candle, we got this move, and we found resistance in that same area. When the market finds resistance, it's always going to turn around and go look for support, which so far it found at the weekly trading zone. Price flows the same across all markets and all time frames, whether it's a 30-minute Dow chart, an S&P daily chart, a 1-minute crude chart, or a 4-hour gold chart. All markets, all time frames. Price flows from support to resistance, back to support, back to resistance, over and over, again and again. All the indicators, oscillators, and algorithms in the world don't change that underlying principle upon which markets operate and upon which our strategy was designed on. So price came down to the short CTA, important price, important area. It got rejected, and I just covered the move to the upside. Okay, now price has gotten below the step line, below blue and climbing, so at this point it may head back to the weekly trading zone, which we would expect to be support, just as it was on the previous candle. That could give us an opportunity to trade on the long side. Keep in mind that each one of these 30-minute swing highs is potential resistance. If this resistance area is broken, then there's the next resistance area, 35,429, call it 35,430. If price can get above that resistance, then that will create a window of opportunity up here as price heads to the next zone overhead. So one trigger on the long side, no trigger on the short side. On the Russell, 2081 was the long trigger. As you can see now, this vertical line separates today Thursday from yesterday Wednesday. We were at the weekly trading zone when the market closed yesterday. And then when the market opened last night, we were right at the weekly zone, at the zone, at the zone, at the zone, at the zone. As you can see, every one of these candles is touching the weekly trading zone. It's not pulled away from it until this candle here. We get an open and a close above the zone, and price moves up to the BBC where it runs into a little resistance, which sends it back to support. And then we get a little bit of a head fake here at the BBC. But ultimately this pullback holds, and it sends us back down to support at the weekly trading zone, 2058/2059. Now the weekly zones are published Monday morning at 6:15 a.m. Eastern. So our traders have an opportunity to get the zones on the chart before Wall Street wakes up. We've published the zones each week since December 14th of 2009. When there is a Monday holiday and the stock market is closed, then the weekly trading zones come out Tuesday morning. at 6:15 a.m. Eastern. So as you can see here, price found support at the zone. That's what we expect when price drops to a zone, just as it found support when it dropped here. And then we triggered the long CTA and ran right up to the target, from the published entry to the published target. From 2081 to 2104, that's 23 Russell points at $50 a point. It's $1,150 per contract traded. So from now, again, these zones were published Tuesday morning. They are fixed support and resistance for the entire week. Resistance, support, support, resistance. Once the zones are published, they're carved in stone for the entire week. We don't change them, massage them, manipulate them in any way. Now on the Russell, price is attempting a pullback here to the VVC, which would take it below at this point. Depends upon how long it takes it. If we continue lower, if we pull back to the VVC, then we will get a second trigger here at 2081. And again, that was a 23-point move, a little over $1,000 per contract traded. If you've earned the right to trade 2 contracts, then it's a $2,000 move. If you've earned the right to trade 3 contracts, then it's a $3,000 move. When you become a CFRN passport holder, before you start trading live money, you need to first learn the methodology, the strategy, and how to use all of the resources that are at your disposal. From the weekly zones to the logic alerts to the CTAs. And so, in class each morning, as Michael is putting on and taking off trades, Michael or Valerie, live in real time, explaining every move they make, every trade they take, and the reason behind it, while answering your questions, you should be trading along in your simulator until you've put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Once you accomplish that, our 2420 blueprint will give you the green light to go live with 1 contract. Then your goal is to increase your account balance by $2,000. Once you do that, the blueprint gives you the green light to add a second contract. Now, the big difference between the first and second contract is the first contract is funded with your startup capital, while the second contract is funded with profit you earned in the market. The blueprint will tell you when it's time to add contract number 3, number 4, number 5, number 6, but you only add one at a time, and you only add with profit you earned in the market. If you follow the blueprint, it makes it difficult to blow up your account again. Okay, most everyone tuned into this broadcast has known the agony of defeat and blown up an account. Don't feel bad. It happens to almost everyone. And the reason it happens is because they don't have a teacher, they don't have a business plan, they don't have a trading plan, they haven't learned a definable edge, they don't understand that this is a business based on probabilities, that it has absolutely nothing to do with luck. It has to do with finding high probability, low risk trade opportunities and then taking advantage of the opportunity, as you see right here. So we've covered the S&P, the Dow, the Russell. Here's the NQ. Now the NQ came right down to the short trigger, but it didn't trigger. It got back above the BBC, consolidated a little bit, made it up to the zone overhead, consolidated a bit, and it has attempted to make a run. The long CTA for the NQ was 15,330, and the swing high so far is 15,340 and a quarter. So that's 10 points at $20 a point. That's $200 per contract traded. Sellers are in control. Price is pulling back right now to the BBC and the weekly trading zone. So that's considered support times 2. If the pullback holds, then that will give us potentially another leg to the upside, another opportunity to trigger here. Be aware of the potential resistance right here at about 15,360. Above that, you've got a window of opportunity right up to the weekly trading zone. So if you trade the NQ, watch your 30-minute roadmap and see whether this holds. Now, if price pulls back and doesn't hold, then we'll start looking for opportunities to trade on the short side. When price is above the 30-minute BBC, I'm only looking for opportunities on my smaller time frame to take long trades. Once price is below the BBC on my 30-minute chart, as it was here, as it was here, then on my smaller time frame that I actually execute on, I'm looking for opportunities to be short the market. And so price is above the BBC, but it's printing a red candle. So for the NQ right now, I personally would do nothing. Some might trade this as a counter trend trade back down to the zone. Nothing wrong with that. But over the last 181 weeks and 9,400, however many individual alerts, every alert in the Logic 247 channel is a trend trade, not a counter trend trade. The reason I only publish trend trades in the Logic 247 channel is because I want everyone who's attempting to learn how to be a trader, how to be consistently profitable. My goal is to give you the highest probability, lowest risk trade opportunities. As you become a more experienced trader, you may very well choose to trade counter trend. Some people, that's their specialty, the counter trend trade. My experience has shown me that trading with the trend, as defined by the 30-minute chart and the BBC, gives you that higher probability, low risk opportunity that we seek. So we've covered the 4 major indices. Let's go to crude oil. It's like we had two-sided action on crude. We have rolled forward to the H contract. And again, the vertical line separates today, Thursday, from yesterday, Wednesday. Back here's Tuesday. Okay, so the first trigger at 85.90 took us up to 86.07. So that's $170 per contract traded. And that same candle took us back below the trigger. We triggered again, and this time the swing high was $86 even. So that's $100 per contract traded. We then got back below the BBC here for a bit. We consolidated right below the zone. And on this last trigger from 85.90, the market took us up to 87.10. Now, when the price of crude moves $1, that's worth $1,000 per contract traded. So from 85.90 to 86.90, that's $1,000 per contract traded. Now, the final trade to target is the next weekly trading zone overhead, which is the highest weekly trading zone for this week. Price looks like it wants to pull back to the BBC. We expect the pullback to hold. It holds more often than it doesn't. It might spike the BBC just enough to get below the long trigger and give us another long trigger to the upside. Once you understand the methodology and the strategy, you don't have to wait for the CTA to actually take a trade. You know where the important prices, important areas are. But in this example here, you could have easily had your goal for the day before price even reached the CTA. We did trigger on the short side, and the swing low was 84.73. So that's $170 per contract traded. That's what the market made available from 84.90 to the swing low at 73. $170 per contract traded. We've covered the S&P, the Dow, the Russell, the NQ, crude. We'll go to gold. Gold did not trigger on the short side, and it barely triggered on the long side. Just ran out of steam. The CTA was at 18.48, and the swing high here was 48.5, so that would be $50 per contract traded. Price now looks like it wants to pull back, or it has pulled back to the BBC. So far the pullback has held. We've got red and falling overhead. So don't be surprised if price starts to drop below the BBC. Once price is below the BBC, now here price was below the BBC, but this was just a pullback that ultimately held. So it requires a little patience. You want to see a candle actually open and close above or below the BBC to confirm that in fact a pullback has held. So if we consolidate here and start printing green, remember you've got an obstacle in your path overhead at red and falling before you get to the actual trigger. And because of what happened here, I would consider, rather than trying to be long at 48 where you immediately run into potential resistance, I would suggest probably 18.50 on the long side, which still gives you a $300 opportunity up to 18.53. And of course no trigger on the short side. Next is silver. Which continues its bullish rampage. When the price of silver moves $1, that's $5 grand. 24.32 was the long trigger. When the market opened last night, we had red and falling overhead, and that walked us down almost to the BBC. Buyers came in, they made an attempt, and they were able to run the market up to looks like the high was 24.32.5. So basically that was just a rejection. On the next trigger, 24.32, takes us up to 24.36. That's 4 pennies. 100 pennies is 5 grand. 50 pennies is $2,500. 25 pennies is $1,250. So the swing high again, 24.36. That's 4 pennies. And then price dipped back below the trigger at 24.32. And we've currently put in a swing high at 24.75. Now you'll notice on the way up, the step line is on the left side of blue and climbing. As the move starts to run out of steam, you'll see the step line cross from the left side of blue and climbing to the right side on your 30-minute chart. That's an indication that price is attempting a pullback to the BBC. And so the first red candle that closes below the step line, once it crosses over, that's the official exit signal. When you have this on your 30-minute chart, when you have the step line, first you have price, then the step line, then blue and climbing, that's as bullish a setup as you can hope for. Right here, here's the crux of the apostrophe, where the step line crosses over, and we're only 9 minutes into this candle. So if you entered here, you could wait for this red candle to close if you haven't taken profit already, or you could simply take profit here. Because with 21 minutes left in the candle, there's no guarantee that this candle will close below the step line. The same buyers that took us on this journey, we had a leg and a retracement and a leg and a retracement. Those very same buyers could come in right here and continue to push price higher. So as a trader, that's a decision you have to make. Okay? All right. So the final market, the euro. We got rejected at the long CTA the first time, and then we barely punched through it. The trigger was 770, and it ran up to 810. The short CTA has not triggered yet, but based upon where price is, below the zone, below the BBC, red and falling in the picture, this could be a good opportunity on tap. And looking left, we have no obvious obstacles in the path, and so if we trigger, now once an alert triggers, there's a high probability that it's going to trigger multiple times. So if it triggers, don't expect it to run all the way to the final trade to target in one brisk move. Of course, that's always what we would like to happen, but it's rarely what happens. You'll get a trigger, you'll get a retracement, the market will find resistance, it'll trigger again, and then we'll get back above the trigger and the market will find resistance at the step line, at red and falling, at the BBC, and provide another trigger. So it's entirely possible this could trigger 2, 3, 4 times before it makes that final run if price continues lower. to the weekly trading zone below. So that covers all the markets. That takes us back to the daily chart. S&P giving up some of the earlier gains, now getting back to this old trend line. We did the Trader Vic. We kissed the underside of that trend line. Today's candle didn't quite make it back up to that trend line, and price looks like it's wanting to drop below this trend line. And so you go to your 30-minute chart and you see how it factors in. It's just exactly what we talked about. Okay, price appeared to be making a pullback to the BBC. The question becomes, will the BBC hold, or possibly price will drop just low enough to get below the CTA number? Because once an alert triggers, there's a greater probability of it triggering multiple times than not triggering multiple times. And so we're 12 minutes into the life of this candle, so we still have 18 minutes left. I would wait and see what this 30-minute candle does. Does it make it to the BBC? Does it make it below the CTA? And then I would look to the next 30-minute candle to let me know whether I want to be trading on the long side or on the short side. Now, because the BBC itself has risen above the CTA, okay, we don't want to be long until price is above the BBC. So even if we come down, spike it, and start heading back up, you want to let price get above the BBC before you start taking your long trades back up to the zone. In hindsight, when you come back later, it will look like price came down and touched this BBC to the tick, but as we can see here live in real time, it has not touched it yet. It got close, it bounced, but we're still printing a red candle, and we still have 16 minutes left in the life of the candle. So use your 30-minute roadmap, use your daily chart, and whatever time frame you execute on to time your trades to go along with the trend as defined on the 30-minute chart. Again, above the BBC, we want to look for opportunities to be long. But I don't want to go long when I'm printing a red 30-minute candle. I want to be above the BBC and printing a green candle when I look for long trades on my smaller time frame. Whether that's a 5-minute, a 1-minute, a 610 tick, a 1597, whatever, or a 4-tick range, whatever smaller time frame that you are comfortable with. And when you're trading the bigger picture, when you're looking for a larger target than 2 points, remember, you cannot risk more than the potential profit in a trade. Now, a trade could have 100 points of potential profit. I mean, the potential profit in this trade is from 45.58 to 45.82. However, if your intention is to only take 2 points out of the trade, just get your goal, be done for the day, then you need to find some smaller time frame where you can utilize market structure and you can time your entry so that you only have to risk 2 points. It's important that you master the mechanical model that is taught in the live training room each day before you attempt to move into the discretionary trading model, where, of course, on any alert, logic, or concierge, we don't want to risk more than $300 per contract per trade less when possible, based on market structure and that simple 3-step process that we teach all of our traders. If you've not yet become a member of the family, you can do that by going to eminifuturestrading.com. That's where you'll get your lifetime passport. Never expires. It's everything a trader needs, all under one roof, one low price. 9 out of 10 new traders do fail simply because they don't have a teacher. We provide a teacher, a live teacher, every trading day for 2 hours, putting on, taking off trades, live in real time while you trade along in your simulator until you qualify to go live, explaining every move, every trade, and answering your questions as they're trading. It's an interactive learning environment. People ask, how long will it take me to learn the strategy? That depends on you. It depends upon how quickly you learn. Some people learn at different speeds than others. But it really depends upon how many questions you ask. The more questions you ask, the faster you'll learn the methodology and the strategy. As a lifetime passport holder, you not only have access to the live training room every day, you have access to unlimited one-on-one mentoring. You learn our proprietary methodology and strategy, which works not only with futures, but stocks, forex, cryptocurrencies. You own the indicator set for life. You have access to the Logic 247 alerts, the concierge trade alerts, the Thursday night workshops. Today is Thursday again. And so we will have our members only workshop at 9 p.m. Eastern tonight. Michael was unable to attend last week. I haven't spoken to him about it, but I assume he'll be there tonight. So members, be there 9 p.m. sharp, and please have your questions ready. When you go to eminifuturestrading.com to get your lifetime passport, if you have questions, you can call Valerie at 949-42-EMINI. You can email support@cfrn.net. Either way will work. And now our good word for the day. Yesterday we talked about going back and making things right. Sometimes it's difficult because even as believers, we have a certain element of pride in us, and we need to learn to humble our hearts. And those we've hurt, those we've harmed, we need to make things right. Today, Proverbs 10:19 tells us the prudent hold their tongues. Sometimes, or my grandmother once said, if you don't have something good to say, just keep your mouth shut. So sometimes the wisest thing you can do is to just be wise and say nothing. The story is told of a wealthy grandfather who went to his doctor to be fitted for a special hearing aid. The device not only allowed him to hear perfectly, it was hidden so no one could see it. When he went back for a follow-up visit, the doctor said, "Your family must be happy to know that now you can hear." The grandfather replied, "Well, I haven't told them about my hearing aid. I just sit around and listen to their conversations, and I've already changed my will 3 times." The Bible says the prudent hold their tongues. And this isn't only a law of speech, it's a law of science. The odds of putting food in your mouth grow exponentially the more times you open it. To put it another way, the potential for saying the wrong thing rises proportionally to the amount of words you say. Ever notice that the person who habitually throws in their 2 cents worth frequently says something that's worth about 2 cents, sometimes less? The writer of Proverbs says, "Do you see someone who speaks in haste? There is more hope for a fool than for them." Proverbs 29:20. A man walked into a pet shop one day where a colorful parrot was sitting on a perch. The man looked at the bird and in a cocky tone asked, "Hey, stupid, can you speak?" To his amazement, the parrot replied, "Yes, stupid, can you fly?" Why does God say so much about offenses of the tongue? Because when you sin with your tongue, you offend Him, affect others, and hurt yourself. And that's our good word for the day. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with His mercy and with His grace. And I'll see you at the bell.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.